If you're living or working in Kuwait, you might be wondering how tax residency works, especially since the country has no personal income tax. But for businesses, investors, or anyone connected to local entities, residency still matters. Let's break down what you need to know. Kuwait does not levy income tax on individuals. Whether you're a Kuwaiti citizen or a foreign resident, there's no tax on salary, dividends, or investment income. That said, tax residency still matters for corporate entities, branches of foreign companies, individuals involved in business activities or contracts that create a taxable presence. So if you're tied to a business operating in Kuwait, there are important rules to understand. Kuwait taxes foreign companies that carry on trade or business in the country. There's a flat 15% corporate tax rate on profits earned within Kuwait. Even if a company isn't registered in Kuwait, it can be considered to have a permanent establishment and become taxable if it has a fixed place of business, signs contracts or performs services in Kuwait, sends employees for extended projects. There's no standalone withholding tax, but payments made to non-resident entities for services in Kuwait may be subject to tax review. Companies doing business with foreign suppliers must file detailed declaration forms to the Kuwait Tax Authority. Kuwaiti companies also contribute to the zakat and national labor support tax, but these are distinct from corporate tax and don't apply to foreign businesses directly. As an individual, expat, or local, you have no income tax return to file in Kuwait. There's no annual declaration, no withholding, and no global income tax. Kuwait has a limited number of tax treaties, and they're mainly focused on avoiding double taxation for companies. If you're a resident of another country, your home country may still tax your income, depending on local rules. Let's recap. Kuwait does not tax personal income. Foreign companies doing business in Kuwait are taxed at 15%. Permanent establishment can trigger taxation. Individuals don't file returns. But corporate activity and cross-border services should be closely reviewed for tax exposure. Even if you're living in a no-tax country like Kuwait, you may still be considered a tax resident elsewhere. Use Pebbles to automatically track your travel days and stay compliant across borders.